What's going on? What's going on? And welcome everybody. Saturday morning. This is your Hierarchy of Traders Needs webinar series. This is installment number 3. And previously we talked a little bit about technical foundation being the first pillar here in the hierarchy. And this is your basic risk management principles. How well you know the market, what is an equity, what is a derivative, what is an option, how do they work? How are they correlated? Your basic knowledge as far as trading platforms, what is a chart, candlesticks, and all that kind of stuff. Whatever you're choosing to understand as far as the stock market is concerned. Trading vernacular too, the lingo, which most traders do have. Second being your psychological foundation, and this is probably, this is actually much more important than your technical foundation. Technical foundation is something that you can control here. Psychological foundation, it takes a lot more understanding of yourself, of how you react to losses, how you react to winners, how quickly you can change, if you're humble, greedy, all those kind of things are of concern here when you're trying to build a good psychological foundation. And now we're going to bring in the number 3 here. We're going to bring in habits and skills. So this is, once you have your sort of technical psychological foundation, it's really about honing those skills and habits that will contribute here to your likelihood of making money and your longevity as a career in trading here. So we're going to talk just about good habit formation. We're going to talk about just expounding upon what you've built thus far. We're going to talk about using your environment, possibly finding some mentors, possibly bringing some other strategies into the foray, just talking to different types of traders, advancing your market knowledge. So these are the things that we're going to talk about today, man. So let's start off here with a couple of stories here on sort of habit formation and sometimes how difficult it is to break some bad habits here, man. So Jesus, I'm gonna just kick it over to you here. Let's just give them a little taste on how difficult it is or how long it takes to, let's say, hone solid habits as far as decision making while trading the markets.
Yeah, and it all stems back, Lucci. That's why I love this group of webinars we're doing, because every piece is almost like a great segue into the next one. It
Right.
correlates perfectly, and the psychological foundation and why it's so important. If you don't really nip that in the butt and try to figure out what emotions play on you. What are the strongest emotions that play on you as a trader? If you don't figure that things out, then you're going to have a tough time with this step here that we're talking about, because it's very easy to get into these bad habits. They usually correlate with the excitement and the fun aspect of trading, right? We all know, example again, we all know trading earnings are a roll of the dice, right? You have every pro trader on the face of the earth who tells you earnings is one of the toughest things to really, get a grasp on and find any consistency in, because you really can't control or manage much risk there. You know what I mean? There's nothing that goes into it. So it's a total gamble. And yet there are still traders who continuously play earnings, and not once or twice based on a company, a gut feeling they had. They get wrapped up into that excitement. They get wrapped up into these huge moves that happen in the after hours, which they have no control of. And it becomes habit forming, right? You want that adrenaline. It's like gambling. When you go to the racetrack, you're going to lose money, but you enjoy that rush. You enjoy that feeling. So, I've seen it throughout my career. I mean, that's where I think a lot of traders go south. They focus more on, I guess, fulfilling the emotion that they feel best at. You know what I mean? That makes them most excited, makes them enjoy this game the most.
Right.
And even though in the back of their minds, even though they're not thinking about it at the time, it's a losing proposition.
Indeed, indeed. You know, and that's actually a great example, and that's how you can really get on, let's say, a bad path. You know, let me give you guys an example here, just as far as my stories are concerned. Like when I was starting out trading and when I was trying to figure out how to make money, number one, like the first two things that I was trying to work my way through is, number one, what the hell is a time and sales? Like, you know, that's how I started out, just understanding what's going on in the market, right? So it took me a while just to even build the technical foundation, right? It's like you look at a time and sales, and you know, what does it look like? What does it act like? What is it? You know, what is it? What are all these things that I'm seeing here? What is a buy order? What is a freaking sell order? What you know, what does a share size mean? And what exchanges are these printed on? Should I care about these exchanges? You know, what are the quotes? What are the quotes at the time? You know, what if there's a large offer somewhere or a large bid somewhere? Like, that's your technical foundation. So that's me trying to figure that part out. Then it's like, okay, after you're making the trades, it's like, okay, I'm taking a loser, I'm taking a winner. Now you're worrying about the psychology part of it. Like, okay, you know, how does taking a loser affect my next trade? And then once you get over this hump and once you start actually making money, and you understand, let's say, what works for you, and you basically understand how to make money, then the game becomes a lot more difficult, because to develop those habits, those habits that you need, you know, those sort of consistent habits. Apologies for this horrible highlight job here, but once you get you know, a good foundation here, now it becomes about how do I consistently control you know, what's happening on a daily basis. So this means that highlighting, you know, the right strategy that fits your psychological foundation, right? So what Jesus was saying is like, you know, with earnings and with, you know, things that are hot, things that are going on Twitter, are you able to cut down that noise? You know, that's a good example of habit formation that can help you on, you know, your trajectory of making money in the market. You know, are you able to kill the noise? Are you able to kill strategies that don't work? Are you able to kill your desire here for quick money? You know, that's a great example of a habit that needs to be formed, controlled, you know, that needs to be exhibited over every single trading day, over every month, over every year, for you to continue you know, your trajectory here and consistently make money. You know, to continue on the earnings point, not to beat this over the head, but you know, there's so much bias and perception that is at the forefront of the way most traders trade. Okay, so you know, you even take an example of where we came from Thursday and Friday, right? Thursday we closed the market up pretty aggressively, and most names were trading super aggressive to the upside, and everybody was assuming here earnings were going to be good. The BOJ was going to, yeah, I don't know, cut interest rates or whatever, and we would get a gap up and we would continue to go, right? So now what do you have? Everybody wants to play earnings to the upside, right? When Expedia, Amazon, all these companies reported earnings, and everybody wanted to play these things to the upside. And let's just face it, most of those earnings, aside from Google, and even Google wasn't that great because it was all expected, it was all priced in. Nobody really made aggressively on the earnings if you just took a long option flyer and you know, you wanted these things to just continue going higher, right? Nobody really banked crazy capital here because, again, market didn't break out and we got lackluster reaction to those earnings. So again, just to go back to you know, good habit formation here, are you able to cut down, or are you able to now advance your strategy to account for the risk? Okay, so now you understand technical foundation, you've got a basic risk management here, but now can you advance that risk? So what does that mean? That means that if I'm going to go into a win, or if I'm going to go into an Expedia earnings, then what do I need to do? Like, I was long Expedia going into this. What did I do? I shaved down to a quarter position. and I sold calls against what I was holding into it, so that if I did get a dismal reaction here, my ass is covered. Okay? Most retail would just roll into these things betting a 120 call, 125 call, a 130 call, and they just buy these things with no risk, with no, with no, let's say, advanced option strategy, and they just take the flyer. Okay? So your habits and skills here are expounding upon your technical and psychological foundation to create some more consistency here. So we're also talking about your trading analysis here. So habits and skills also have to do about how much are you looking at your trades, the success of your trades, and the outcome of your trades. So Jesus, how much analysis did you do on your trading strategy, when you were, kind of starting out and then just figuring out what you're doing now? How much analysis and constant sort of reiteration, on your strategy did you have to go through, to get to the consistency you're at right now?
Well, this is why I was kind of excited talking about this particular, um, spot on the pyramid here, habits and skills, because this, I think is so important. And I also found enjoyment, and if you're passionate about the market, you should, but I found enjoyment in trying to really get a handle on habits and skills, and really, pound this part of my whole trading home. And I'll tell you how, okay? I mean, you think of it, in any sport, in anything, let's take baseball, golf, okay, what do these pros do? And let's say baseball and golf are very similar, right? They get their timing down, right? They get their swing down,
Yep.
all right? And once they figure it out, we were talking about in the last webinar, as a trader now, let's go back as a trader. What do you do well, and where do you find yourself getting into trouble, right? That's the psychological thing.
Absolutely.
Why do you keep doing things if you continuously lose money, right? So that's a psychological thing. So now that you've figured out that, you looked over your trading and you figure out where you excel, where you get into trouble, where you make money, what you do well. Now, again, let's use that example as a baseball player, a professional baseball player, or golf, for example. They find out where the problem is in their swing, okay, and then when they found that, they made the adjustment. What do? They go to the batting cage and they swing till their hands fall off, right? They go and take cuts and take cuts and take cuts. They wake up the next morning before the game, they're out in the cage again, taking cuts, taking cuts, taking cuts. Why do they do that? Because they want to get to the point where that swing becomes a habit.
Yes.
You understand?
Yes.
They're not thinking about it. They don't want any emotion coming into it. They want to get into that box, dig in, and when that fastball comes, they want to be able to just for it to be habitual. Their swing is there already from doing it so much.
Right.
Okay? And that's basically where you want to get to at this stage. You found all the things that you do well. You found what makes you money. You also found the things that get in your way and you're not successful with. So at this stage, the name of the game is to take what you do well and makes you money and do that every single day. Every day. And just focus on that every single day until it becomes a habit. Until you wake up and, I get this a lot, Lucci. I get, well, Jesus, why don't you play, one earnings? You loved, they said you loved Microsoft. You said the flow was ridiculous going into earnings. Why don't you just take a flyer on Microsoft? That's not going to hurt you.
Yeah.
And I said, of course that's not going to hurt me, okay? But the thought to me, okay, weighing the pros and cons, taking a shot on one earnings, the cost of maybe breaking my habit of ignoring playing all earnings wasn't worth it to me. The upside of making money off that Microsoft wasn't worth me breaking the good habit that I worked so damn hard on to get to this point. You know what I mean? And now it's like, earnings, I don't think about it. You know what I mean? I don't even think about it. It's not even an option to me. I'm never playing earnings. And not only earnings, at everything I've done throughout my career where I've just lost money and never had success, I just stopped doing. And the reason the way I got to that was coming in every day and just chopping wood, you know? And again, I can only talk from what I do. Everybody's different. But for me, it's, again, day trading off the steam, off the momentum of wise guy action. That's what I do well. That's my bread and butter. You know, that's what pays my bills. And just every day I look to get better and better and better at that. And it's almost, you know, you make the comment a lot. You say, you know, I'm almost robotic in a sense, and it's really gotten almost to that point, Luch, you know, where I'm just so used to doing one thing that's where all my focus is.
You know, and I love that you brought the sports analogy out there for it, and we're going to expand upon this sports analogy as well. I think that's the best reference. And then what we're going to talk about too is how some of those habits can get broken through emotion, and then what you have to do to get back on track. And I think that's a huge thing for a lot of us here, is that how do you get back on track? But to go back to the sports analogy here, like I'm a big tennis player, right? And you see some of these top players when they serve, right? When they serve, they first serve, second serve, it's completely habitual, right? Now, when there's emotions involved in that serve, right? Because it's, let's say, a big point, right? You got a set point, you know, maybe you're down 5-4 in the set. It's add out, right? It's add out. You're serving to stay in that set. And all of a sudden, there's so much emotion on that serve, right? On that friggin' point. And that emotion tricks you a little bit, right? And we're talking about second to second, last minute, last second kind of, you know, you need that sort of mental fortitude. Otherwise, what happens? Boom, you double fault and you let go of the set. Subsequently, just because of that one double fault, you lose the match, right? You lose your mojo, you lose the momentum. So that's how big, you know, psychology plays into the markets, right? That's how big the second to second emotions here can affect one decision, right? One decision in the market or a couple decisions that all of a sudden results into a mess of, let's say, a mess of just bad psychology, bad decision making that all of a sudden puts you on just a downside sort of trajectory. And this happens quite often, and I want to zero in on this, and I want you guys also to chime in. Guys, you know, feel free to throw out those questions. We're going to take them while we're doing the webinar here too. So if this is really hitting home for you, let us know, and we can kind of expound, and we can just keep going here. So you know, that's kind of what I want to throw at you there. It's like sometimes if you take, let's say, a bad earnings, or you take too much of a flyer, or you get too heavy on one position, and you know you don't have good risk management, and all of a sudden that puts your account at, you know, a place that you didn't want to be. And subsequently, what happens? You go on this losing trajectory. And this is what we're talking about when we're talking habits and skills. How to prevent, number one, you know, those losing sort of trajectories. And then number two, how do you get back? How do you get back to that flow state, right? To that mental in the zone kind of thing. So we're going to talk a little bit about in the zone, you know, when you're trading in the zone, and then what happens to you when you're not, and how do you get back there, okay? So let's talk a little bit about that, man. Jesus, I mean, how do you, I mean, we've already seen that, number one, you keep yourself to a certain strategy, so you prevent a lot of the emotions that would come with doing earnings, with doing, you know, outside sort of a swing trading kind of thing. So you kind of take yourself out of the scenario in order to keep your emotions in check, correct? I mean, that's how you kind of control yourself.
Yeah, correct, but it still happens, Lucci. And you bring up such a great point because, again, and this may be the reason, you know, I'm so in love with the game of baseball, maybe because, you know, I can relate it to what I do, okay? You take that perennial 300 hitter, right, who hits 300 every year, you know, has got that swing down pat, that's what he does, and that's his strength. And then what happens? He runs into a stretch where, you know, he runs into 2-3 games where he hits 2-3 home runs. And this guy's not a home run hitter now, okay? So what happens? All of a sudden, that translates after that little stretch it translated into this guy getting into a slump. Why? Because now he started hitting for power. Now he's trying to hit for power rather than doing what he normally does and does well.
There you go.
Okay? And he ends up getting into a slump. He's got to go back, look at the tape, and study video and say, what the hell did I do here? What did I do to that swing? You know, my bread and butter, what did I change, and how do I get back to it? And it relates to trading, I mean, perfectly, because even myself, okay, I structured something, a game plan, to block out as much as possible. But it's, you know, it's impossible to block out everything. And where I run into problems is the same thing, okay? I'm a degenerate. That home run, that hurts me more than helps me. And I'll tell you why. Even on the day trading aspect of things when I trade, okay, I'll run into a stock and I can't even sell it for nothing less than a nice gain because the thing just took off. I bought it, it caught a rumor, whatever the case may be, exploded, okay? So rather than me taking my 2-3 grand off the table, I end up hitting one for 10 grand, right? Which is rare because usually I'm taking, you know, my 40-50 cents off the table whenever I have it. So now what happens is I hit this big winner. Now, and it's on my mind all the time because I know it can get me in trouble. Now a lot of traders, they're looking for that home run every single time. We see that Lucci day in, day out in the steam room, right? We see a day where everything flies, and then all of a sudden, you know, traders are treating every other day right after that follow the same way, thinking everything's going to fly. And it ends up costing them money. Rather than going back to what they do best, okay, like, again, that baseball player who just is a good hitter and the power comes here and there. He don't look to hit home runs. It just comes once in a while. Rather than him focusing on hitting that big winner, that home run, he had to get back to his bread and butter and do what he does best. And it's the same thing in the market. You know, I try to block out as much as possible, but that's where, you know, that emotion, it could come in and try to break that habit where I'm looking to take small profits and I'm totally content with that, with the littlest amount of risk as possible. And then I run into a couple big winners and then all of a sudden I'm letting things run too much without taking profit off the table and I'm costing myself money, you know? And I mean, it's almost identical, right? It's two different games,
Right.
The market, baseball, sports, whatever, but it's almost identical in where, you know, where you can find trouble emotionally.
It is, and you know, Jesus made a key point about slumps and about you know, being on your sort of P's and Q's, right? Like you're trading at your best, and then all of a sudden you go into a slump because of X, Y, and Z. Like, guys, talk about some of the factors that put you in the slump. Talk about some of the factors that you know, that help you be at your best, right? So let's talk a little bit about that. I mean, what is going to help you, you know, continue to be able to form good habits, and what is going to be, you know, how are you going to get into that flow state and stay in that flow state? Now, granted, everybody has slumps, right? Everybody has, even these top athletes who get paid $40 million a year, all right, $20 million a year, $10 million a year. These guys all have slumps, all right, and they know that. NBA knows that. The teams know that, right? It's all, you know, but the thing about trading is it's just you, yourself. That is literally it. That's all you have control over. And even that, for most people, they don't have control over it. Therefore, likelihood of making money is very freaking minimal, okay? It's just you. So you need to understand yourself and how well you are about, you know, building these solid habits and what kind of environment you need to create around yourself as far as who you're talking to from the trading perspective, as far as what you're doing in your life too, that's going to help you build, you know, a better foundation with which to expand upon and actually make money. Okay, so what is the environment here? That is, you know, are you working out? Are you taking care of yourself mentally? Right? Or are you in a situation where you're very emotional, right? You're not where you want to be in life, let's say, and you're struggling and trying to figure out exactly what you want to do, and all of a sudden you're looking at trading as a way out. You know, that is a heightened sort of emotional state that is not conducive to making money in the market, because you're looking at the market to solve your life issues instead of looking at the market to figure out, okay, you know, what is an actual strategy that I can pull off, you know, that I can pull off consistently. When you look at the market as a way out, what do you think you're going to do? You're going to go to Amazon. The next time Amazon reports earnings or Facebook reports earnings, you're going to put 10 G's on a flyer here and hope to make 6 times your fucking money. And that's gambling. That is gambling. That is not how you want to consistently make money in the market. So when we talk about this level here on the pyramid, we are talking about honing, you know, your technical foundation, your psychological foundation, and putting yourself in the best place here to actually, you know, consistently make money. We're getting a ton of comments here, so we're going to start bringing some of this stuff in. Rasul here has a great comment. I spent 2 years refining a system, but I still have impulses to take trades that have nothing to do with my system, right? The issues is that many of these trades work, and then I get into a rut thinking whether I should go back into a subjective style instead of continuing with a mechanical style. And this is, again, this is a big habit formation kind of situation where it's like, hey, I have this strategy, I know this strategy works, but all of a sudden I go into a little bit of slump and I look elsewhere, right? I look outside for answers, okay? And this is not that different from any other slump, right? You're trying to figure out how to get out of this thing. So what do, right? Oftentimes, though, that digs you a little bit deeper. It digs you a little bit deeper. And for some reason, with trading and with emotions in general, it's like you always have to hit rock bottom before some changes can be made. And this is really just kind of like the disgusting part of the human condition. And how do you prevent that? How do you prevent the need of hitting freaking rock bottom before you change some of these habits? I mean, Jesus, how difficult is it to change some, let's say, some bad trading habits? I mean, I've seen some people go through some really bad ruts and never come back. And what are some of those big reasons you think that people can't change those habits?
You know, everybody, from what I've seen throughout my career, Lucci, everybody's different. I think that's the most important thing to understand, is that what would hit home with me, you and I, okay, may not hit home with Dan or Joe or Ralph out there, you know? So everybody's different. I mean, some people really need to blow themselves up before they say, all right, enough is enough. You know, for me, it got to the point where I think I was at a point where I tried almost everything I could out there. And that's what my goal was. I really wanted to take a serious look at everything out there, all different styles, all different strategies, all different indicators. And I realized that, you know, none of them were working for me. And when they didn't work, and I found what I found, you know, I myself that, why would I even fool around with anything else? You know, so I got to that point for me where I realized that there was one way to make money in this game for me, and I had to put all my focus there. Right. Now, again, for everybody else, it's different. Some people really need to get, you know, nodded in the face. I mean, some people, you know, just can get frustrated off a couple of small losses and then be determined to not lose any money and clean up their act. But, you know, it's reaching that point, like you said. You know, it's keeping that open mind and trying to control the emotion behind something's that pushing you to continuously lose money. Right. Like that question you just took is a perfect, is a perfect example of what I've seen the most of, okay? I had, you know, like I said, I used to work around a lot of traders. So when I day trade, a lot of people weren't, I guess, excited about my style, right? They would see, I would take, you know, a $500 loss here. Right. You know, I would make $600 the next day. Right. I'd take a $200 loss. And they're looking at it and saying, you know, it's peanuts. I don't want to be bothered with that. And then what happens is I have that day that we were just referring to, that home run day that came by accident, okay, that I wasn't really looking for. And they're like, wow, you know, look, that strategy's not bad. He just, you know, he made 10 grand today. And then they come in and attempt to do it after that day. And then they experience those scratch days. and they get discouraged and go and find something else again. You know what I mean?
Right.
So it's about finding the confidence. Once you have the confidence and you know something works, okay, you really truly believe that you have something that's going to work over the long run and find consistency. It's all about you sticking with it, sticking through the rough times, and, you know, just doing what you got to do every single day, because it will turn. You know, and that's, again, the baseball analogy. Everybody goes through, you know, even the best of players go through little slumps, right? The best hitters will have a bad week or a bad couple of days. What do? Do they change their swing off a bad couple of days? No.
Right.
They know that it's just something they got to stick with, and eventually it's going to turn. But most importantly, they have the confidence that it will turn. You know what I mean?
Right.
You need that. Otherwise, you're going to be flip-flopping all over the place, and you're getting nowhere doing that.
You know, and another part, and again, we're getting tons of stuff coming in here. Julie is saying, after looking through my notes, trading SPY and Facebook has been the most profitable for me. You know, and that's the analysis right there. You know, Julie is talking about, you know, the just honing, you know, what you've already built, right? It's looking through your stats, figuring out, continuing to zero in on what is the best strategy for you, what really works for you, what is, you know, how do you get yourself in the best mental state? And those things here we are talking about here on our third level here in the pyramid. You know, let's see. We got a bunch of questions coming in. We'll take those in a bit. But Jesus made a comment here that I want to expand upon here a little bit. It's what are those things that you start forming some bad habits, okay? And what are some things that happen to you emotionally or mentally that keep you in that state when it comes to trading, okay? And let's talk a little bit about that. Like, what are some of those things? And I'll tell you right now, the expectation that the market needs to pay you X, Y, and Z per month. I see that as one of the biggest ones, right?
Yep.
I need to make $5,000 this month or I can't pay my bills, right? Now, subsequently, what happens as a result, okay? It develops some bad decision making and some bad habits, and then all of a sudden you stay on those bad habits until either you dig a deeper hole or you actually get out of the situation that you're in. Most of the time, you dig a deeper hole. Now, when you dig that deeper hole, your account gets smaller, right? Now, all of a sudden, you're in this slump here. A guy who's playing in the MLB, he's getting paid whether he performs or not, right? And, you know, these high-level athletes, they're getting paid whether they perform or not. You have a $10,000 to $50,000 account. How long can you afford to be on a bad streak and still have enough capital that you need in order to perform your strategy properly, right? How many of you guys get into that rut and then subsequently you dig your account to the point where you really can't make it back because you don't have the capital, and now all of a sudden you're subjected to doing other trades, taking an earnings flyer, because now you're trying to get back to your 50K. How many of you guys actually think about that before you're actually trading, okay? Before you actually take a trade, right? Usually what happens is emotions build up so much that, you know, you're just flying out there. You're flying out there, you're trying to make money every single day, and that's what happens. And then all of a sudden, a 100K account dwindles to freaking 10 grand because you're on a bad streak. How do you expect to get back to a freaking 100 here, you know, off your 10 grand? The only solution that you are going to say to yourself is get even riskier. And by the way, that's what you've been doing the whole way down. Get riskier, get riskier, get riskier. Okay, and these are the bad habit formation, you know, that happens, that puts you on these bad trajectories here, and this is what causes you to be unable to come back. Okay, so what do you need to do? If you're thinking along those lines, what kind of environment do you have to build around yourself? Who do you have to have around you to make sure you don't get like that? What do you have to do now? Do you have to walk away? Can you walk away for a couple of weeks? Julie is saying took some heavy losses earlier in the year, just had to walk away for a week or so, and that solved her issue. Rusty is saying, yep, been there, paying for rent is a terrible way to trade. Exactly. You know, you can't do those things, okay? So let's bring it back here on the habits and skills here. What are some ideal things that you can do here to prevent or you know, just try to prohibit or try to push off or even cut down some of the streaks that you go through? So Jesus, what would you say to the person that asked that? It's like, okay, what kind of environment do I need to build around myself? Just as far as analysis, the people around you, you know, what kind of things can we tell these guys to do here to make sure they have the best sort of environment around themselves?
Well, and that has a lot to do with, again, the game plan and structure we spoke about in the last webinar, okay? And, you know, like Julie's pointing out, she took some heavy losses. That's where, you know, money management, okay, and it may be different for some of you, but that particular example, that's where money management can play a huge role, okay? Because those big losses wouldn't be that big if you managed properly, right? Again, if your game plan is to put $5,000, again, just a ballpark, $5,000 or $10,000 behind every, you know, single idea or every single play you play, then you have to stick with that and not ante up just because you feel better about it, or you just made a little bit of money, or you lost money, like you mentioned, and got to make it back. You know, that comes back to that structure and game plan that you have to put in place before you even start clicking buttons, okay? You have to do that. I mean, to hone in all that emotion and all that stuff around you, you can't just say, okay, I'm not going to do that, I'm not going to do that. You have to have a game plan already in place, okay, to, you know, like, Lucci, you're working on that automated stuff, and some people need to do that. You know what I mean? Where, again, it's automation that hits the brakes for you. Okay, if you don't have that discipline and you can't really hone in on that discipline, then that's where, you know, like Lucci, that's one of an area he really wants to start, you know, chiseling out and getting better at. I mean, he's looking towards automation to, you know, get to the point where it's only going to benefit his trading. So there has to be the plan there. That's the only advice I can give, is there has to be the plan there, and there's got to be the confidence behind what you do that allows you to stick with what you do no matter what, okay? Now, Julie brings up a point, I trade Facebook and SPY, and that's where what I do well. Here's the problem that Julie's going to run into. What happens when Facebook and SPY don't line up for what she does well, right? Let's say Facebook and SPY goes into a downward correction, or whatever the case may be, and is out of the ballpark of what, you know, the area of you like to trade those names. What are you going to do now, Julie? What, you know what I mean? Do you have the ability to sit and wait and do nothing? Like Lucci mentioned, do you have bills to pay and you have to try to make money? Right. Then you're going to run into a problem there. You know, so this is all the stuff that has to be ironed out ahead of time. You know what I mean? Rather than on the fly while you're trading, because it will never get done that way. And that, again, it's a big problem amongst traders. What happens is, again, swing traders, let's say, Lucci, we went through that chop zone, right? A couple months here, where swing traders, you know, the best thing to do was probably sit on your hands and do nothing, right? If not, worst case scenario, play really, really small to where you're not losing much money. But can you sit there and do nothing for 2 months? All right, that's the problem. And what happens is you end up trading, you end up forcing it, because like Lucci mentioned, you have bills or you just want to play, and you end up losing money in that time, and now you're in a time where you should be making a ton of money, and you're a little, you know, you're reluctant or a little hesitant because you're coming off some losses. Right. You know, it all plays together. So the best advice I could give is 2 things. One, you find something where you have the confidence behind it. I think that's important. And 2, you have a game plan already in place, okay, that plans for the rough times. Right. You have to plan for the rough times. Right. People always like this market now. Everybody's making money. Nobody's looking at what happens when the music stops here. You know what I mean? And it's going to bite people in the ass and send people into orbit. People are going to be trading all sorts of things that they never traded before because they don't know what to do with themselves.
Right. And we're talking a lot about quote unquote, you know what you should do, but you don't do it, right? And this is the part where you got to think about those things. And this is why the likelihood of making money for most people is very low, right? It is very low, and we know this, okay? And you guys know this, okay? So how do you put the odds in your favor? And we're talking about habits formation, good habit formation, and then honing your skills as you find a strategy that works for you, as you build your technical foundation, and you're going to continue to build that technical foundation. So we're still talking about your skills continuing to advance. So what are we talking about? Let's say my options knowledge was basic in the beginning. Now my options knowledge is freaking crazy, right? I know how market makers now will sit on offers, or they'll sit on bids, or they'll widen spreads, or they'll try to get people to pay the offer, or pay the or sell the bid. I can figure out a lot of things with wide spreads too. If I want to get size with wide spreads, finding what routes to go through, so you're going to advance your technical foundation as well. But the most important part in this habits and skills here is basically just expanding upon your earlier foundation here, continuing to grow as a trader, and finding your sort of flow state, right? Finding your flow state when you're at your best. And when you are at your best, juicing it as much as you possibly can, while also knowing that slump is around the corner. It's always there. It always will be there. So if you're going to play the game knowing that, let's say things are going to die down a little bit, so, how are you going to plan for that? What kind of cash do you need to put aside for that? Maybe you have a good run. I remember I've had so many monumental runs where I've made $500,000 or $1 million within 2 months. Now, my expectation was that the following month I'd make another $500,000 or $1 million, right? And that's not always the case. So what are you doing, to account for all of these things here? Let's talk a little bit about peers. Let's talk a little bit about peers in trading, and then we're going to open it up to questions. Guys, we have a bunch of questions here. I am definitely going to go through these and talk about a bunch of these things too. But let's go through peers and mentors. Like, Jesus, what do you think about, about aligning yourself with, with trading peers, about trading groups, and then about mentors? It doesn't work for everybody, right? Some people are best just trading by themselves. They're at their best trading by themselves, where they're so far away from the noise. And that's fine. If you are that person, that's what you got to do. But as far as like advancing your understanding of the market, psychology, and everything, how has other people affected your trading career, let's say? Jesus.
Yeah, and that's a good point, because you don't necessarily have to align yourself with people who trade the same exact way. Okay, you can learn a little from everybody, but like the guy who brought me into the game, he explained to me, and it's so true, that I'm going to learn more about what not to do from others than I'm going to learn about what to actually do. And it's so true. It's so true. And, I'm talking about back in 1998, I remember that comment because it couldn't be any more true than what I see, every day since that comment. I see other people and how they lose money and what they do and why are they losing money. And I hate to say it because it sounds evil, but you can learn from other people's mistakes as well, okay? And you're going to come across that by accident, not even looking for it. You're going to see where people get into trouble. Why did he lose money? What did he do? What emotions came into play? How did he deviate from his original plan? But at the same time, like Lucci mentioned, not all the time, but at the same time, it's not going to be a bunch of people, but there's going to be that handful of people that trade a certain way, may not be exactly how you trade, but you can learn little tidbits that can help you out as far as discipline, as far as money management is concerned. Again, as far as style, like if I didn't keep an open mind, okay, and look at what other people are doing, and I was just closed-minded trying to find it at my own, I don't think I would ever stumble upon what stumbled upon what I found today.
Yep.
Originally, what I found today was based off unusual options activity, okay? And at the same time, the questions I was asking was, why were they losing money playing off unusual options activity? What were they doing that they couldn't find consistency, okay, in trading off unusual options activity? And, I dig a little deeper, because there were times that things went well, and then there were times where they would give it all back. Right. And that's where, I found something specific where I just zoned in on that, and I found something that actually works in where, I wanted to keep my focus and focus on only that rather than that whole, that whole field of unusual options activity. But my point is, if I didn't keep an open mind and look around and see what other people are trading, who knows? I may not have found what I found today. So you got to keep an open mind. You can learn a lot about mistakes and what not to do with people. That's a given. And very few times and very few people, you will learn some of the important things as far as discipline. What makes that trader so disciplined? How does he manage his money properly, and give you ideas to put into your own strategy. So keep an open mind and pay attention to what's going on around you.
Indeed. And I have benefited so much from traders around me. Like, I started in the prop world, and in the prop world, you have people trading all kinds of shit. You got people trading equity, you got people trading futures. I didn't even know what an option was until some dude in the office made me buy like a 10 lot on the Cheesecake Factory for earnings, and I doubled my money overnight. I was like, what the fuck is an option? That's how I found out about options. I was just like, okay, now, and again, like, I was a cowboy as a kid, and I was like, okay, how do I put 200,000 in an option and double it? That's literally how I thought. That's how I thought when I was a kid, and that's how. And in my arrogance, I knew what I was doing as far as an equities trader and as far as a swing trader. So all I did was bring that to options and try to pull ridiculous cash on heavily liquid options, and that's how I made most of my cash in 2009. Now, the caveat is 2009, I had a great market for it, right? I had a nice, slow, trending up environment where I could get size. Like, I could put $250,000 in a SPY option, and a month or 2 months later, I'd have double, I'd have triple. That was a good environment to do so. Now, in 2015 and 2016, you're talking about a whole different environment. So habits and skills also includes your ability to detect what market environment is best for you to do X, Y, and Z in. So this is where you really get the skills here that add to your sort of career longevity here that we're talking about. But I've benefited so much from traders, coaches, other folks around me. Now I hang out with automated guys. These guys, they don't even talk markets. They talk Python scripts. They talk they talk code. They literally talk code. They talk standard deviations. They talk risk. That's what they talk. It's like, okay, how do we control macro risk? How do we control this and all this kind of stuff, right? And when you talk to all these different strategies, and when you have all this going around, that also advances your technical skills. That also advances all of your whole foundation here, so that eventually you can come into this situation, get to the height of this pyramid here, and consistently make cash, in the market, even and try to also limit your downside here as well. So guys,
and it takes work. It takes work, Lucci, too. Like, and this is where that habit and skills part comes into play here. Because when you're doing the same thing and focused on the same thing, okay, every single day, like you mentioned, okay, and I'm sure you would agree with the tape reading aspect, right? When you focus on that, and we're doing that every single day, not only did you get better at the trading aspect, but you learn more and more about the tape reading aspect of things too, right? All of a sudden you saw something that you never saw before, and how it translated into price. You know what I mean? Like for me, for example, just watching the flow every single day. I learned the reactions off certain sweepers, where they get into trouble, where I should, okay, now I should maybe adjust my stop loss for things like that. And that, the habits end up becoming, the skills. When you keep doing the same thing every single day, you're going to learn more and more about it. You're going to get better and better about it, and you're not going to want to participate in anything else. But it's having that game plan in place that watches your risk, and then the ability to focus and have the confidence in something that works, so you can block out everything else.
Indeed, indeed. All right, guys, so we're going to take some questions. Great discussion here. Hopefully you guys got a good amount out of it. Before we take some questions here, let me throw out some links here for you guys if you want. Any of the previous videos that we've done, you can use this page here. You can also go to our YouTube page, and you will see everything here as well, and you can just watch it straight on YouTube. And that would be YouTube//Sang Lucci. And you can get right to all the videos, as well as a lot of past content that we've done. We got a lot of free webinars out there, and then I do some comedy stuff with my friend Kenny Glick out there. We also have a lot of high-frequency trading stuff going on here that you guys want to check out if you want to expand upon your technical sort of foundation here. Find out about other strategies, things like that. We have some promos here that are going on in the house. We have access to the, access to the Steam Room first month for 49 bucks here. So you're getting a pretty steep discount on that. I'll drop the link here for you guys as well. And then we also have a modern flow trading course that Jesus and I just created. And this course will basically teach you how to trade around some of the aggressive order flow that we see in the option space, how to understand it, number one, how to set up your platform, things like that. We've also added a lot of other components here to the course. You're getting live tape reading sessions. You're getting live trade review sessions from Jesus and myself for swing examples, day trade examples. You can also do a consultation with us. We can help you optimize your brokerage situation, talk to you about taxes, and even if you want to automate your trade, we can get you on that path towards automating your trade. We also throw in some psychology stuff. If that's not enough, you get a month free too of the Steam Room here. So let's take some questions here, and I'm going to go ahead and throw these links for you. So what do we got? Julia's saying you and Kenny need to do some stuff together. Nice break from the Chop Fest. Of course, Raji is saying, what do you think of Amazon, Google options? Let's get to more of the psych stuff here. Let's see. Christian here has a great question. This is a great question. Do either of you manage different accounts that have different goals and therefore time frames, i.e. income portfolio with a long-term horizon versus option trading portfolio with a short swing horizon? And if so, how do you balance the conflict that these horizons create? For instance, market gets overbought long-term, but short-term, long-term trade setup. And for me, it becomes hard to take those long-term trades. Dude, this was like me in 2009, in 2010 or 11. Like, I had a long swing account, and then I had my day trade account. And what happened is that the short-term market fluctuations would always push my emotions towards wanting to get rid of bad positions or just wanting to just get rid of that feeling, right? So when you have, let's say, bad habits or emotions just kicking up, you kind of want to just get rid of this, right? Your body is just looking for ways to get out of feeling the pain. So what does it do? It gets you out of your short-term trades, and you even let it filter into your long-term account. So you even start gutting your long-term account, or you start shifting around your long-term account, even though nothing has really happened in the short term. You're just getting so pissed off with short-term fluctuations that it's kind of killing your other strategy. Me as a person, I have not been able to do this successfully, Christian. I have not, I might have like spurts where I do because everything is lining up to one side. So for example, like indexes right now are all lining up to the upside. So it's kind of easier that all my short-term trades are long bias and all my long-term trades are also long bias. So it's easy during those environments. But in most environments, I cannot do it. I know that for myself that I cannot manage 2 different types of accounts, let alone 3 or freaking 4. If I had to do that, I would have to automate, or I'd need a partner, to trade some of those other strategies. Jesus, what do you think about his question?
Yeah, same boat. I used to do that, Christian. What I would do was, I would day trade the action that wasn't swing worthy per se, okay, and some of the stronger action I would actually put on swing trades for. But not only was it just mass confusion and, which one would I swing? Should I take my profit, leave this a couple days? I got myself into trouble, like Lucci mentioned, where, it got to the point where a lot of times it was basically the market. And that's where it was more luck, in my opinion, where I was making money more than skill or an edge. And what I mean by that was, like Lucci mentioned, when the market lined up, it seemed like, my swings would make money. But then when we ran into a pullback or correction, I'd give a huge chunk of that money back. And then, it got to the point where I took an overall assessment of things, and I said to myself, it's really not even worth it. It's not even worth making myself dizzy. I'm better off just focusing on what I do best, which keeps me the most disciplined, which, I can manage my risk the most, which, minimal risk in my opinion, and just focus on that. So I attempted that. I don't know if you're aware, Christian, I was a broker, so you want to throw that into the whole ball of wax, and that's why I left the business. The rules changed so much in that game that it was just almost impossible to make money. And what I mean by that, I would get paid commission. So I had to trade every single month. Right. Now, at the same time that I had to trade to make money, because the only way a broker makes money is from buying and selling, at the same time I couldn't short-term trade. I couldn't day trade for clients. Even selling the next day they would bitch about with the new regulations, churning and all that shit. So, it got to the point where the structure of that game wouldn't allow me to make money for my clients. Right. So that's what I mean, the best thing to do initially, at least at first, you don't want to put too much on your plate, okay? You want to stick to something that you do best, that you feel most comfortable with. I ask traders all the time, before they even start, what do you want to do, okay? If you want to swing trade, then focus on being a swing trader and look to design a plan to manage your risk for that. You want to day trade, then focus on that. You can't go in saying, oh, you know what, this stock didn't move, so I'm going to hold it for a couple of days. You don't want to do that. Okay, so my best advice would be find one style, look to perfect that, find consistency in that, and then maybe you can explore some other things. I doubt you're even going to want to be honest.
Right. Christian, take your time. You know what I mean? That's the best advice right there. Fucking be patient and take your time, bro. Because if you try to do all this stuff together, it gets very difficult. Like my position sizing was a little bit too much when I tried to do it as well. So my emotions were riding so much on every tick with my positions. So therefore, it was just kind of too much to handle. So if I were to do both at the same time again, number one, I need automation, which I currently have right now and continuing to build. As far as just an exit strategy to just rely on. That way the automation can just get me the hell out whenever it needs to, and I can just put on a trade and then let the automation take care of it. That would be the ideal scenario, so that on my day trade account I can do whatever the hell I want to and not have to worry about, longer term kind of things. So Christian, there's some things you got to think about, and there's some tools and things that you can use out there too to help you out as well. Try not to do too much at once. And if you have some success, don't immediately go to adding another strategy, and adding another strategy. You got to ease into this shit. You have to ease into this shit, because if you don't, you're going to put too much on your plate, and you already know what happens. So we got a bunch of questions coming in here. Let's start taking some of these questions. Rusty is saying, guys, what are some of the things you do to manage your emotions after you take profits and then watch the trade continue to run without you? Rusty, the FOMO here is hitting Rusty aggressively. Dude, Rusty, everybody feels that. And you're talking about acceptance, okay? What is
Yeah.
the what is the big thing in the Bible? That God grant me the serenity to accept the things I cannot change, or whatever that comment or statement is. Like that's where you need to be. And Rusty, that comes with experience. You know what I mean? That comes with doing it enough and realizing it doesn't matter. So Rusty, you got to get to the point where you realize it doesn't fucking matter, right? If this shit runs without you, then iron out a system where, let's say you have a trail stop, or you just stop yourself out at break even and you want to let these things run. Give yourself at
Exactly.
least that, if that's what you want to do. But on top of that, it's accepting the fact that the market is a market. It doesn't give a shit about whether you're in it or not, or whether you stay and capture the whole freaking move, or you just get a little piece. Like you have to start. You're talking about acceptance. So most people who haven't accepted the market as it is and what they can extract out of it, like you're still young in your career as a trader. So, you still have some time to go as far as experience. So that's all I would have to say about that. Jesus, you have any, you
Yeah,
have anything
that's
for
Rusty.
Rusty?
That's the story of my life. But like Lucci said, it's happened to me so many times that don't get me wrong, I'll still curse out the stock throughout the whole entire day, even to the point sometimes I gotta yank the symbol off my fucking screen, shit like that.
Yep.
But you know, I understand. It's happened so much to me, and I'll be the first to admit that's my major problem is letting winners run. And the reason behind that is because I'm so content with taking profits. You know what I mean? I'm happy. I'm thankful for at least something I found to allow me to take profits. Because if that's your biggest concern and biggest problem, Rusty, you're well on the right path here. Okay, so don't even worry about that right now. And like Lucci said, there's a couple things you can play around with. ATR stop. I experiment with that from time to time. Still can't get it right. But it's going to happen. It happens to everybody. It happens to everybody a lot. And as long as that's your main problem, okay, and the problem is not to the downside. If you were to tell me the opposite, and where letting your losers run too far, that's something you really got to nail in the butt right now. But what you're talking about, don't even let it get to you. Because if that's your biggest problem, you're golden, brother. You're golden.
Indeed. Raul is saying, can you explain for a while, how do you define consistency? Consistently, would you consider making money 10 out of 15 days in paper money consistent? And Raul, so this is a subjective question, but I do understand the issue. And again, people who start out trading, and by the way, there's a bunch of other folks here who are asking similar questions about how much time does it take to become consistent? How much time, this and that. And if you do X, Y, and Z, it still doesn't mean that you're going to be a profitable trader. This is kind of what we want to hammer down to you. And this is why, we kind of want to have these discussions, because just because you have a good technical foundation, just because you know what an option is, just because you have an okay idea about your emotions and all this kind of stuff, doesn't mean that you're on the way to consistently making money. If you're paper trading and you're making 10 positive trades 10 out of 15 times, that still doesn't tell me shit. What happens on those 5 losers? Are you taking monstrous losers? I don't know what the hell is going on. There's so many different strategies too. It took me a year and a half to figure out how to consistently make money. Now, prior to that, I would have a $25,000 month, and then the next month I'd lose 10 grand. The next month I'd make 50 grand, and the next month I'd lose 40 grand. Like, is that consistent? That shit ain't consistent. So what did I need to learn? I needed to learn that even though, I found like my flow state and I understood how to make money, like I didn't know how to keep the freaking money. I didn't know how to keep the damn money. I still have issues keeping my freaking money. So now you're talking about expanding upon your psychological foundation, understanding where you just suck, understanding where you go on the slumps, understanding what is it that gets into your mind that you can't shake. Is it your life around you? Is it somebody around? Is it one person around you? Is it where you're living? Is it your environment? Is it your expectations? Is it yourself? Like, who are you fighting against? You know what I mean? Like, what is it that's holding you back? And that's part of honing in on again, the right strategy for the right environment, building upon, having people around you that are supportive, that have your back, that are positive. You got to think about all this stuff. So as far as consistency is concerned, if you're paper trading and you're making money 10 out of 15 times, like, guys, my win rate is like less. It's like 40%. It's 40%. Even when I was swinging in 2009, it was less than that. Okay, but what I was doing was that I was taking a crap load of small losers and then finding that one or two trades that I could size into and freaking smoke it. That was my strategy. You guys might have a situation where you want to be profitable 70% of the time, or whatever it is. So this is all the analysis that you need to do on your trading to figure out how you're going to make money here consistently, and then doing that consecutively over and over and over in the right type of market environments here. We got another.
Rusty, the answer to your question as far as consistency, I mean, you're going to learn more from, like Lucci mentioned, your losses than your gains. Because here's what happens. If you tell me you're profitable 10 out of 15 days, okay, and let's say hypothetically you're going long only, or whatever the case right now, but the most of your winners are longs, okay, and you're telling me that's happening right now in this market, that could be totally luck, total luck, okay? Everybody's making money right now, everybody. Okay, so if you're designing a strategy right now and you're making money on the long side over the last couple of weeks in this rally, you got nothing. You don't have anything special. Right. Like I said, everybody's making money. Now, what happens when a different climate comes into this market? What happened to that strategy back in December through February? What was going on then? Okay, what do your losers, like Lucci mentioned, what do your losers look like? All right, where are they coming? Are they coming in a bull rally mode like we are now, or are they coming in the tough times? You're going to learn more about that strategy when things are going south. Okay, that's what helped me out the most with my strategy. Like right now, I'm not impressed that I'm doing well. Yeah, of course, it's money, I'm going to take it. But what I'm more confident about is that when this market flips, okay, one, I'm not going to get caught. Two, I don't have any huge risk. I'm not holding overnight. You know what I mean? Three, if the environment changes and the market is choppy or whatever the case, chances are there's not going to be, again, I'm using my strategy as an example, there's not going to be call sweepers on the board for me to play, so I'm not going to be over trading. You understand? So the reason I found consistency is I traded through the worst of times. Right. You understand? Right. And that's where you're going to get the answer about consistency, not in the good times. Everybody's making money right now. Everyone's going to find something that works right now unless they're trying to be a tough guy and short this market. I mean, it's that simple.
No doubt. No doubt. All right, we're going to take a couple more questions, and then we're going to kill it here. Again, guys, you can access these recordings on YouTube here, or you can go straight to this page, Wall Street Jesus /hierarchy, and you'll get this page as well as links to the videos too as well. Let's take another question here. We got another one from, let's see, James here. To build on Rusty's question, actually, wait. We have another one. I often hold too long because I don't want to miss the potential continuation, and then it falls back, and I didn't take a good profit when I had it. Case in point, I'll give you a great example. And this is, sometimes they run, and then sometimes they don't. I mean, you take a look at that United States Steel. That shit is running and then some. That's probably one of the only names right now that is running during, just chop environments and just a crapshoot kind of trading. These sort of steel names. You look at this Chipotle. What happened, right? We had a breakout off the earnings. I was long some 440 weekly calls, and I smoked them. I took 3/4 of the trade off, and I left 1/4 of the trade on, right? Now, if you look at those options, and I think did we just expire? Yeah, it just expired because I had this week's, I think, for 440s. They went to $10. They went to $10 when this thing hit 440 that day of, right? They went to $10, and the next, and literally when this thing washed out, those options were worth $1. $1 and less. Those options are now worth nothing. You know what I mean? Nothing. Absolutely nothing. You got this one move and no continuation whatsoever. Okay? Now, you flip that around and you look at a name like, I don't know, you look at United States Steel. What happened to this thing? She had a run up to 21 bucks. Like, we were all swing long this thing. And then all of a sudden, a disgusting pullback to maybe 19 and change, somewhere around here. So you'll see it right here. It wasn't really a disgusting pullback, but just like a decent amount of a pullback. And this washed out most of the options. And then all of a sudden, you get this ramp up into earnings. Earnings happen to be good, and you get another consecutive run up. I had the freaking what did I have? I had the August.
August, yeah.
I had the August 20s. Okay, and the only reason why, we started making this trade because Jesus would just port out crazy options flow, aggressive buyers in August, September, October, and they were buying like 25s. There's people buying 30s on this damn thing. I had the 20s, okay, from an amazing cost. Hold on, you guys got to see this because this trade was monumental. Probably one of my best trades for 2016, hands down. And it could have been so much better. But you guys will see here real quick. So once this stock was around like 18 and change, so I was starting to pick this up at a little under $1. My cost was like 90 cents. All right. And there was a buyer previously for this option a couple, another month back for around $1.02. And then Brexit happened, and it was just a monster washout. I was able to sell this option at like I got $2.50, around $2.50, $2 to $2.50. Then this pullback happens. I only had a quarter of it left. I basically ditched the trade, and I didn't catch this. I didn't catch the dip buy, which I should have just bought back into the dip, and aggressively caught this move, which was insane, absolutely insane. So some of these things are going to run, and some of these things ain't going to run. You know what I mean? That's just a name of the business. That is the name of the business. So you're going to have to lock in some profits, and you're going to have to, and you're going to have to play these things as they come along.
Especially options, right, Lucci? I mean, if you're playing options, if you're thinking about options now, you have to get used to and in the habit of locking in profit. You have to. If you really like, the name or whatever the case, leave a piece on and let it go. But if you're talking about options specifically, you better get in the habit of locking in profits when these things move, because like Lucci just pointed out, when they go south, your option is going south quickly. Okay, so you want to be able to sell into strength and lock in that profit when you have it. And if you like it, leave a little piece and let it go. But, this goes back to the other question. You can't let things like this bother you, because a lot is luck. It's just luck. Like Lucci pointed out, some go, some don't. This one in particular, you had to hold through earnings, and it ended up being a good thing. Expedia had a big run, okay, had bad earnings and gave a chunk back. You never know with these things, okay? So the thing is locking in profit when you have it, especially in options, and if you really like the name, leave a little piece so you get paid if it does go.
Indeed, indeed. All right, guys, we're usually stretching these ones, but we're having a lot of fun out here. It's a lot of fun answering some of these questions and talking about a lot of this stuff as well. The last two pieces, again, are super important here, so we're going to have a lot of fun following here next Saturday. Again, guys, you know where to access all the previous videos here. You can get everything on YouTube plus some, and then use these links. Use these links, guys, for some pretty solid discounts here. I would say the biggest value is the course here. You're getting the live sessions, from both Jesus and myself about how to trade some of the order flow, how exactly to do some of the things that we're able to do in the option space, as well as the equity space, future space on top of that. And you're also getting a free month of the Steam Room too here with this discount. And you're getting all this for about $3.99 here, which is a really, really good deal. So go ahead and take advantage of that. Hopefully we'll see you guys in the Steam Room. If not, you guys know where to find us next Saturday here for the 4th installment of the hierarchy of traders' needs. Take care, everybody, and we'll see you next Saturday.
Thanks for coming. Have a great weekend, everyone.